Welcome to Jenko Forex tutorials. Top-down analysis is the key ingredient for successful trading. We start by determining the trend on H4. Apply simple moving averages to help if necessary. Simple moving averages like 10 can tell you the immediate trend. 50 moving average will show you the intermediate trend, while 200 moving average gives you an idea of the long-term trend. In this case, the market is in a downtrend just by looking at the downward sloping lines on our H4 chart, precisely finding resistance under the 50 moving average, which is red. This 50 moving average is also under the 200 moving average in sky blue. This is a double confirmation that the market is in a downtrend. Third confirmation, has the market tested one of the moving averages recently? And which of them? The higher the moving average, the better. And how many times has it tested that line? To find our bias or entry direction from this given H4 chart, you will discover that all factors are in favor of a sell order, since the market has tested the 50 moving average, which is considered a stronger dynamic resistance compared to other lower moving averages such as 10 and 5. So, the market is currently going back to retest that resistance line, and since it had proven in the past to be a resistance level, a lot of sellers will be ready with their orders to sell heavily, while market makers will use false momentum candles on lower time frames to trap buyers. Now, we know our direction. What next? We will check on H1. We move down to the H1 time frame to observe the price action and trend direction to confirm if it's in harmony with H4 prices. In this case, H1 is showing us an uptrend, but we know this is a short-term trend since the market is above 50 moving average but under 200 moving average as observed in the H1 time frame. Now we go down to M15 to get our entry, but here the relative strength index 5 is still around level 50, and normally we don't take any trade at this level since we don't know if the divergence will continue downward or retrace. But then we have a fractal telling us the market is temporarily moving upward, so we wait. While waiting for the market to move upward and give us a discount or better sell entry point as RSI 5 moves above level 50, we jump back to H4 to monitor any changes in price action. And oh my god, there is a bearish doji, which is also an inside bar reversal candle. This is a perfect confirmation for an absolute sell. All hell breaks loose. We are taking the sell. With magnificent additional confirmation of RSI 5 reaching between levels 80 and 90 and reversing already, this is a good time for a sell. Yoo-hoo! Let's have a review of the core ingredients necessary for a successful top-down analysis. To bolster confidence, every successful trade must begin with a top-down analysis, starting with H4 at least, right down to M15 time frame. Then move down to H1 to see if price trend is in harmony with H4. Then go down straight to M15 and check for the short-term trend. Don't worry about M30. In this case, we already know that the almighty H4 is moving down from this following chart. Let's see how our current trade unfolds. 8 hours later, our trades moved as planned, perfectly sold out. Thank you for watching. See ya.